I recently invested nearly $7,500 into SCHD, but why did I choose this ETF? SCHD has been one of the top performing ETFs in recent years, and I've been adding it to my portfolio daily. It's been all over headlines and stock market news, and this comes from its history of price appreciation and regular dividend increases. In this video, I'll break down my opinions on SCHD's current price, dividends, my investing strategy, and how I think SCHD will perform in the near future. So SCHD has really taken the market by storm recently, and they are making tons of headlines throughout social media. This comes from their performance. Looking at a few timescales here, on the year to date they have returned almost 11%, and if we go out to the 5-year timescale they have returned around 50%. And if we look at their total performance, since they were first brought onto the market about 12 or 13 years ago, the total returns are 234%. Now the best part of their historical performance is that we haven't even taken the dividends into consideration yet. These are one of the key drivers for this ETF, as they typically maintain around a 3.5% yield. Now if we start looking at their dividends a little deeper, we can see that they have been regularly increasing. Each year their annual payout growth has gone up, which makes this an appealing option for an investor like myself looking to generate passive income inside of my own portfolio. They have a pretty strong track record here. As we can see, every year since they were first brought onto the market, they have made a positive increase to the annual payout. Now let's see how the historical returns would have looked if dividends were reinvested. When we start reinvesting dividends, we really start to unlock the true potential of compound interest. This is shown by examples of SCHD on the 5-year timescale. When we saw that the shares had grown 50%, if we consider dividends being reinvested, the total return actually goes up to 79% over the last 5 years. And if we do a similar comparison, but when the fund was first brought onto the market, we've seen previously how shares had grown 234%, but if we consider dividends being reinvested, the total return goes up to 390%. Now we need to understand the individual stocks that this ETF is driven by, and this comes from companies in financial services, healthcare, consumer defense, and more. I'm already invested very heavily into the S&P 500, which is made up of over 30% stocks that are in the technology sectors, and this includes lots of those major tech giants. For me, I don't want to keep all my eggs in one basket, so SCHD stands out as an option that will allow me to diversify my portfolio into some of these other sectors. So the specific companies that make up the holdings are ones such as Home Depot, Verizon, Cisco, BlackRock, and more. Now, in my opinion, having these companies as a higher weight in the ETF provides me some peace of mind when negative headlines on the S&P 500 come to light, as this gives me some mental clarity that I'll be diversifying my money into other sectors. There's always articles or reports coming out saying that the market is in a bubble due to the tech-driven impacts. Let me know in the comments below what you think of these articles, but in my opinion, I always want to take a conservative approach, and although I still like the S&P 500, it makes me more interested in investing in an ETF like SCHD, as there is less of a tech-driven impact on the fund. For my personal investing strategy, I first reallocated some of my positions. As you may have seen in my portfolio review video, I was holding some low growth ETFs that were not performing as I had planned, and in my opinion these positions were not meeting the goals of my portfolio. Since it has been a few years of these performances, I made the decision to sell off these holdings and begin reallocating into SCHD. This is what I used for my portfolio to fund the initial lump sum position, and on top of that I'm also buying $15 of SCHD every single day. Now this approach may be a bit unusual, but in my opinion, dollar cost averaging has been a strategy that is beneficial to my own investing goals. Finally, for my thoughts on SCHD and some of my personal forecasts. Before we get into it, it's important to note that past performance does not mean future performance will be the same, but for the purposes of my own portfolio, I will use similar values, as this is my projection. Using a basic compound interest calculator and plugging in these prompts with my initial investment of $7,500, and my monthly contribution would work out to be about $300 a month based on $15 per day as my strategy. My timeline would be 30 years until retirement, and finally using an estimated interest rate of 10% to be conservative. Now using these numbers, at the end of my 30-year time frame, I would have invested $110,000 of my own money into SCHD. But if these returns that I theoretically used actually happen, my return could be around $825,000 at the end of this 30-year period. Let me know what you think of SCHD in the comments below. And if you made it this far in the video, be sure to like and subscribe for more financial education related content.